Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 28th of January, 2021. We have one more trading day or two more trading days, including today, before this month is done with. Monday's February 1st. Another month gone. This is episode number 1926. Thanks for being here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, things changed rapidly here in the last 15 minutes or 10 minutes since this pre-market summary was published by Convergent Trading. We seem to have taken more of a risk on as opposed to neutral overnight posture. The market just broke out big on the upside. We moved from 37.37 in the S&P to 37.74 currently. Really rallying on some pretty decent lifting here, seeing the delta rising. Same story in the NASDAQ. So things have changed a little bit. This is a slight, mild risk on move currently, and that's where we stand. The overall market, the key factors impacting the market: U.S. economy likely logged its weakest performance in 74 years in 2020. We do have earnings still in play. Southwest Airlines reported, and so on and so forth. The S&P and NASDAQ futures slipped, with Dow Jones was little change as investors locked in gains in heavyweights Apple and Facebook following their upbeat earnings, also awaiting a reading on fourth quarter GDP and weekly jobless claims, which came in. Those numbers, just refresh this page. Those numbers this morning: GDP growth in the U.S. Q on Q 4%. The forecast is 4.2%. Wholesale inventories came in at 0.1 versus 0.2. Jobless claims or initial claims came in at 847 versus 900. So those are relatively positive numbers. We still have new home sales for December at 10 Eastern. And we have consumer confidence out of Japan at midnight Eastern U.S. time, expecting 31.2. And those are the big pieces from the overnight session. Really, there's not much more to read into it than that. The market has yesterday's move has really flushed out some weaker hands, and the market is recovering. We're pushing through the RTH mid in the S&P currently on very heavy volume, 523,000 contracts. Again, a lot has happened since this sheet in front of you was created. 523,000. Remember, the point of control or the mode of the volume is 370,000. We've been hitting about 210 or 220 per session. The overnight inventory is shifting slightly. Let me grab that chart so we can update. Just love it when the market makes a huge move like that. The overnight inventory imbalance is actually at 0. The overnight inventory completely balanced at the moment. This is measuring the volume that has traded above the prior close versus below the prior close. So this has also changed from somewhat bearish to neutral, with prices, with the actual stocks moving into mildly risk-seeking in terms of posture. The Russell is now up 1.25%, 1.25% or 26.2. Actually, it didn't move all that much, but the S&P moved from plus 15 to plus 23, up 0.61%, and the NASDAQ is up 47.75 points, or 0.36%. The NASDAQ gaining a lot, so you could see that the move really impacted the NASDAQ the most. It was down before this last push. So that's where we stand. The weakest component right now is the 30-year, the U.S. 30-year bond, which is now down 19 ticks or 0.35%. The 10-year note is down 8 big ticks, 16 small ticks, or negative 0.18%. Again, market moving from neutral to slight risk on, and it's broken up to the upside. The overall profile is still, it's relatively balanced, of course, with a break now. We'll look at that in a second. Let's take a look at what was expected yesterday versus what we got. This is the accountability portion of the daily broadcast. You know, it's nice to look at a chart and ramble on and say whatever, but it's something else to come back and say, okay, here's what we expected. Here it is on the chart in front of you, and here's what happened. So yesterday, the primary idea, the main idea is responsive buying. That's what we're seeing here in the green. The green is the primary scenario, or the key trade, or the big trade of the day, the expected big trade of the day. Expected that to push, and as I said yesterday, it may turn at 09, it may turn at 16 or 22, 22 being the strong resistance, and then beyond that would be 40, but 40 was too far for where we were opening. So we're looking for a reaction at or around 09, 16, or 22. The main idea is an impulse down. As you see this green arrow here, the main reaction is an impulse down. Get on that impulse down and look for a pushback to 94. But really the key target down here is 75, 37, 37, 75. We're currently trading. The current high overnight is what? What is the current high overnight? It is 37.75. So this was our target to the downside. It is currently the overnight high. We drove right through it yesterday, but the primary scenario into the FOMC was pretty much spot on. Here's what actually happened. Of course, this being a very active session, there's got to be a lot of squishing in terms of these bars here. But this is how we opened. We looked for a market that is, the market opened at 38.06 and went to 38.07 or so, 38.07. And remember, we're looking for 38.09 before we expected it to turn down. It went to 38.07 right off the open, a drive down, pullback, continuation, and it looked like it was done to the downside. It may become responsive and start pushing in that direction, and that threw me off. I could not see a good argument to get short up in this area, as it was approaching or pulling back. Now that the IB's in, it was pulling back towards the initial bounce high above the mid, above VWAP, and back into the opening swing. It just didn't make sense for me to look for that short again, especially since 37.75 was already taken out. 37.75 was taken out so quickly. It's down here. Was taken out so quickly and done so fast. I did not catch the short side. It was too fast. Once we opened, it was a quick 4-tick move up and a big move down. Look at this move, 23.75 points right off the get-go on the 6-tick Renko chart. That happened very, very quickly after the open, and kind of left us behind at the station. So where things became a little more obvious, as it put in this double top, this local double top, we would expect under normal conditions a higher low pulling back from a double top and then an extension through the IB, because we're looking for a break of the initial bounce. That's the IB stat. So what that says is there's likely to be the historical probability of a breach of the first hour's high or low during the session is somewhere around 97% historically. Again, as always, past performance is not necessarily indicative of future results, but this is what we're gunning for here. I'm looking for a higher low to trade against and look for the break and then look for the gap fill. Start to work itself back to where? Back to what I said here, 1622. That would be the area that I would be targeting if it would turn up and continue. But being as it was right in that 3,800 area, this was a tough area to trade. Not making excuses, it just was. After this, since it failed to put in a higher low after that double top and started to move lower, it seemed muddy here, and then it became a lot more obvious once we started gunning for that IB low. From there, really, it's just find a short spot and hang tight. So we ended up pushing through to the 3740, which was the next key area down, 3730.75, and then flushed out after the close. We ended up flushing out to the low of the day, which was in the teens. So all of this is being done, and this is really important here. All of this is being done on positive delta. So it's kind of squished up here. It's hard to see, but what you have is a market that opened up here. This green line is the open. This is the zero. This is the equivalent of the zero line on the delta. And as price moved lower, the delta was pretty neutral to positive. As the market pushed higher, it was still neutral to positive. But then as the market started to push lower, the aggressors became, what's going on with this chart? Come on, expand. The aggressors became the buyers. So look at this delta. As the market is moving lower, as it's impulsing down, the delta's impulse is pushing higher. As the market's selling off, the delta is moving higher. We did have a little bit of selling right here. Once we broke through the initial bounce, a quick stop run. But as it moved lower, the delta remained positive. Pretty good positive, by the way, above 20,000 positive. That's generally relatively bullish. And as we discover prices lower, guess what it's doing? It is going even more positive. So this looks to me, and there's just no way to know what the purpose of those participants are. This could be hedging short positions in the future and hedging short positions held in equities, equity options, or whatever by buying futures. That could be the case here where they're lifting the offer pretty aggressive. These are pretty aggressive positive delta numbers for a selling market. And if you see, as you see it dropping here, you can see that parabolic move. I mean, pretty decent rotation. Rotation expansion yesterday was pretty dramatic, yet the delta is just not responding to the downside, which means that net there was a more aggressive buyer throughout the day, or there are many more aggressive buying participants throughout the day than there were sellers, and this could happen on either bids pulling back, and there wasn't much volume hitting on the way down, so price drops on very little volume, or as the volume was dropping, there was lifting going on. Somebody's aggressively lifting the markets. These are not icebergs, because iceberg bids are standing bids that get hit by sellers, and those actually contribute to a negative delta. What's happening here is the third force, or the invisible force, so to speak. It's those people who have not participated, who don't have a footprint in the market yet, are lifting as prices are going lower, and they were rewarded. I mean, if you look at where we ended up yesterday with this low of 37.06, we've moved 100 points from the high after the open yesterday in RTH. So we moved 100 points in the S&P down, and as we did that, there was some buying, and look at how well they're getting paid here. We ended up pushing the 3706, but we didn't push by that much. 3703.50 in the overnight session, and you can see that overall the delta is positive as well in the overnight session most of the day. So it's, to me, these guys are getting paid right now, and don't be shocked if we hold above the mid-century figure, which is right down here. We put in basically a double top in the overnight session, pulled back to VWAP, and then exploded to the upside. And if you look at how it exploded to the upside, let me give you my volume scope chart. You could see there's quite a bit in terms of 100 lot plus players pushing even as we approach the overnight high. There's a lot more of that down here. As we broke through this 3750, we created a stop run where there was zero prints on the bid. So pretty aggressive buying is my point. I won't dwell on this much longer, but I wanted to kind of point this out. Overall, scenario one played out pretty well, but what we have is a push, an impulse, a very deep pullback, right? Breaking 50%, breaking 62%, whatever on the fibs, extending out into what is an additional impulse, having a very deep pullback back to VWAP yesterday, and then finally getting a true impulsive move, pullback, and then continuation, pullback, continuation, like impulse after impulse after impulse, and now we get a reversal, an impulse in the other direction, higher low, double top, pullback, and then finally break. So this looks like an inverted head and shoulder for those who look at traditional patterns, and it's pushing back to where we're looking at it coming back into yesterday's point of control, which is just above. Remember, the 37.74.75 is important. There's a stock zone there. You see this gray here. This has been here a long time. If you look at your 30-minute chart and you squish it, you'll see there's quite a bit of action there at 37.75. That's why there's a stock zone there. But overall, where are we headed? We are likely headed back to the major balance at 37.94. Wow, there's a lot. I know this is long-winded and it seems like I'm just talking and talking, but when the market moves, the narrative becomes a lot more involved, and that's what I'm covering. I'm really looking to understand the narrative, and I'm looking to trade that narrative by understanding what the market's really looking to accomplish. So right now, we are through yesterday's mid. And we are pushing towards this big volume area right here, right? Okay, so that becomes the target. Now, what do we do? What do we do once we get to 37.94? I don't know, but you can see how prominent that is in terms of participation. That is, I mean, it's simple, guys. It's the volume tells you how much interest there is at that price. It's that simple. If there's so much interest at that price, it doesn't just happen. It's not, Sam calling Bruce and saying, "Hey, can we trade at 37.94?" No, there are hundreds of thousands of contracts going off at those prices for a reason. It's not because there's a moving average that crossed at that price. It's because the market sees value in that area for whatever reason at that point in time, and that point in time has been since the first day of January. We've seen 37.94 as value for the S&P 500, given all that's happened, all of the court cases and insurrection and the new president and the executive orders and all that stuff, everything that's going on. We see the market accepting and wanting and being attracted to this 37.94. We tested this 37.94 by pushing through to 88 just Monday. And then we started here yesterday, came all the way back, and we are working ourselves back. This is a market that has failed to push prices higher, has come back to the MC point of control, tested higher, made new highs, then failed back through the MC point of control, tested below, went to the 50 SMA here in the futures, and is making its way back to the 37.94. Okay, that's the story. Anyway, this is getting really, really long. Let's move into what's expected for today. All right, I'm just setting up the chart. Okay, so what do we have? There's a lot here, a lot of action, so a lot to go over. So today we are back in, there was really no value yesterday. We are back into the thick part of yesterday's profile. We have two distributions yesterday, and we have managed to push ourselves back into the upper distribution. We're on the edge. This is likely the overnight inventory is back to zero, so we're not really looking for a pullback, a responsive selling spree. But overall, we're looking for a choppy open, likely to find sellers coming in, late sellers coming in. And I expect it to push back to the 37.64, so 64 right here. If not, likely to push back to this 50 on the extreme. And if it does, I'm looking to buy it for a push back into 37.78, yesterday's point of control, with a key target at 37.94, expecting it to chop at 37.94. If it does not stop at 37.94, we go into yesterday's gap. Okay, we go into yesterday's gap, and then that's an untested area, and then you look for the gap mid. Then that's 38.28 or 38.23. But really, if it goes to 38.09, then we have arrived. So that's what I'm looking for. I'm looking for consolidation here at the 94. I'm looking for a fight at 64 and 50, and I'm looking for some consolidation at yesterday's point of control before we start to squeeze the late shorts yesterday and return to the normal market mode. Okay. Overall, the daily one-time framing is down, so you got to pay attention to yesterday's high break, which was at 38.0675, 38.07. So that's what we're looking at. Sorry, I know this is really long, guys, but this is what I would be doing for my traders before we took on the markets. The second is continued drift higher. I'm looking for it to push into 85.94, consolidate in this area, make a poke at 3,800, then look for an impulse down, and the market is likely to rest, come back and rest in this 37.74, 37.94 area right in here. And this would be a resting day after a trend down day yesterday. But every time we've sold off, we've really bought the market back up. We've bought the market back up because the overall sentiment of the market is that more money is coming out of fiscal policy and monetary policy. You heard what Jerome said yesterday, and you know, they want to do whatever they can to support the economy, and that means it's good for stocks. So I'll leave you with that. Good luck. Get ready for your market open. Mind your risk, and just make sure you're here. You're doing what it takes to be here the next day. Cheers, everybody.